I'm a little bit concerned right now, and my concern has not so much to do with China signals more regulations in the coming years and all of those scary media headlines. Instead, it's got something to do with my NIO and Tesla position, but more on that later. So it seems the sell-off in Chinese stocks in general continues. As you can see here, this is the KWEB. So that's an ETF with Chinese internet stocks in that, and you can see that it almost reached levels of the end of 2016, so it has sold off that much, and that was really crazy to see for an index that big. And it might be a little bit too early to speculate whether or not this could actually be the bottom here on the support zone. I'm probably not a good indicator for that, because I'm still really unconcerned and really relaxed about all of this regulation fear that I'm seeing out there, and that means possibly there is still not a bottom in. Maybe I still also need to have some drawdowns in order to get in panic and starting to sell some stuff. So far I'm not managing too much on the portfolio side. I'm rather already buying some of the latest positions as mentioned before, and that may have to do with the fact that my bubble in which I'm living, like with China experts and people from China, investors in China, and they're actually pointing out that China is in a transition, and it's going to go in a new kind of innovation landscape around 5G, AI, biotech, quantum tech, autonomous space, and so on. And that, mainly it is kind of a Western media and political sphere consciously or subconsciously misinterpreting things in China again and again. Of course, that doesn't help the stock prices, and yes, it's painful, but I also see those announcements that the regulation will continue and in which kind of areas, rather as, kind of a guidance and trying to actually improve communications with investors, because to be frank, even the regulatory bodies in China noticed that they kind of messed up with the way that they have kind of started cracking down on things and so on. And so yes, there will be more regulation to come, but if you're looking actually inside in some of these regulations, for instance, this one just coming out covering what is secure data in China and what companies need to do. It's interestingly quite vague in about what companies have to do. For instance, they need to appoint some kind of a data security officer in order to make sure they have processes that make sure that there are no data leakages. And there are certain processes to be established about how to procure hardware, for instance, in areas that are sensitive to national security and stuff like that. So these kind of laws, I think, will come out there in the future in different areas. And so far, I think in most of the cases on the bottom line of the business, it's either an opportunity or won't affect even the bottom line at all for most of my current holdings. So that is something that couldn't shake my views around the companies investing in. Why I do get a little bit concerned about, for instance, Tesla and NIO is that we have some more news around the chip shortages. For instance, a plant in Malaysia by Bosch, so a German company supplying some of those chips, seemingly out of business right now with some new COVID regulations. And that is really not so good, because I mentioned before like how Q3 and Q4 will be good for the automotive business, but then we now hear, I think it's GM who's shutting down plants again. So that really kind of is something to worry about, because now it's actually the time when the increased volumes should be scaling. And so maybe for Tesla, which has really high volume numbers already, this could face an issue. For NIO, I'm not so sure. It's lower volume, so maybe more manageable, but on the other hand, in the past I couldn't say that NIO really particularly handled the chip shortage well, right? So in comparison, for instance, to Xiaopeng and Li Auto, we've seen that NIO had some issues of scaling their production. So that is really something on the fundamental side to monitor at least. And that would also kind of make my optimistic outlook into the end of the second half of the year actually more unrealistic, if that would really be the case. But so far it's only some speculation, rumor and news. We haven't got any official news by the companies themselves, but certainly this is the stuff that I'm really worried about, the fundamentals on the business. And I think that actually smart investors and institutions are seeing this as well. So for instance, here I posted that one in the Patreon community, and by the way, way, I make plenty of updates every day in this community. So if you want more frequent information on all of these issues, make sure to join this Patreon community. And one interesting insight here is that, for instance, if you look at the ownership score, that's a score automatically calculated by Fintel.io, which I use as a data source there. And basically it identifies companies with the highest levels of institutional accumulation. So where are investors are actually accumulating. And you can see here NIO has one of the highest scores there. Every day new institutions are buying NIO, even on those dips. And interestingly here, also Axnet has quite a high accumulation score. Recently, just Renaissance Technologies, which is one of the most important hedge funds and most successful hedge funds in the world, has gotten a position back in Axnet. And so I think in these companies like NIO or Axnet, where investors are accumulating, it's maybe not as smart if you try and kind of trade around some weaknesses of the short-term stock prices and try and sell in order to get in back lower. At least this is not my current strategy. Instead, I just keep on accumulating, but that is not investment advice. And so they perform even better than currently AMD, Tesla and Apple even. But there are also companies like SAP Health which have a low score in terms of accumulation by investors right now. Hopefully this can change. And speaking of that, I just came off the Q2 earnings by SAP Health and had a look at the numbers. SAP beat the revenue estimations on the upside. It had earnings per share which were far beyond the expectations, so that's really good to see. On the other hand, the guidance is perceived to be quite weak, and so maybe that's something investors will focus on. I had a chance to jump onto the earnings call actually and talk to the management directly, and so I will certainly make a follow-up video more in detail to that in the coming days. But on the fundamental side, I would say I'm really happy with the numbers. It was great numbers, and also the replies that I got from the management during the earnings call were actually quite good. So overall, I would say right now really is the time to really understand the fundamentals of these companies, investing in companies with good balance sheets, companies that are possibly not as much at risk as others are in terms of what will be the actual effects on the bottom line. Other than that, of course, the sentiment is down right now, valuations are down, but I would say that this over time will also change again, because investors will actually see that these companies keep on growing, and also that the bottom line won't be affected as much as possibly anticipated. And then increasingly also get educated about how those regulations unfold. Right now it's risk management in terms of nobody knows what's next, who's next, how's next. But I think over time, when this plays out, we will see that actually the worst case assumptions will not manifest. And so those who understand this right now and see those opportunities in some of these areas, I think for those, this could be like the March 2020 for Chinese stocks right now, in terms of, once again, if we look at the charts like KWEB and so on. So anyways, these are my quick takes on that. Hope you appreciate it. Smash a like, and then see you in the next one.